In this free video course, you will learn everything you need to know about trading with Fibonacci. Whether you are trading stocks, crypto, Forex, or any other market, this video is designed to take you from a Fibonacci beginner to a Fibonacci expert. Hello everyone and welcome to this Fibonacci trading course. Let's begin here by taking a look at what you can expect to learn in this video. The very first thing we're going to take a look at is, of course, what is Fibonacci. And we will, of course, take a look at what is Fibonacci in trading, but we will also very briefly take a look at Fibonacci in nature. Because the Fibonacci pattern is not only something that appears in trading and on our price charts, it actually appears in many natural phenomena as well, and that is super fascinating. In the next chapter, we're gonna dive deep into how the Fibonacci tool works. So for example, what does all of these numbers actually mean? And where do the numbers even come from? We will also take a look at why these numbers are important and how they can improve our trading. In the next chapter, chapter 3, we will take a look at how to use Fibonacci retracement. The Fibonacci retracement is one of the most common methods to use the Fibonacci, and it can help us find great buy signals in the market. But we will also, of course, take a look at how to use Fibonacci extension. Fibonacci extension is more about finding price targets, while Fibonacci retracement is more about finding entries. And we will, of course, cover both of these step by step. In chapter 5, we will cover 3 specific Fibonacci concepts that you need to know about. We will take a look at the golden zone, the golden pocket, and also something called 0.382 to 0.5. To master Fibonacci, these are 3 things you need to know about, but don't worry, we will go over all of these 3 step by step. And last, but definitely not least, we will take a look at some advanced Fibonacci settings and some advanced Fibonacci trading strategies. So before you watch chapter 6, I highly recommend that you watch all of the previous chapters. I have built this course in a sort of step-by-step manner, so you will understand every chapter better by watching the previous chapters. But alright, so let's begin by asking the very important question, what is Fibonacci? Well, the Fibonacci pattern is a sequence of numbers that can be found everywhere. And the pattern was introduced to the Western world by Leonardo Fibonacci. And right here you can see an image of Fibonacci himself. But now, what is this sequence of numbers and why is it so important? Well, if you focus here on the image to the left, you will soon realize that the sequence is actually pretty simple. I hope you can see, but the first 2 numbers here are 1 and 1. And if we add these numbers together, we will get 2. And now, if we add 1 and 2 together, we will get 3. To get the next Fibonacci number, we add the 2 previous numbers, so we add 2 and 3 to get 5. What happens if we add 3 and 5? We get 8. And by now, you can hopefully see the pattern. To get the next number, we add 5 and 8, and we get 13. And this pattern goes on and on, so if we add 8 and 13, we will get 21, and so on and so on. And here's where it gets interesting. This pattern can be found everywhere. So for example, if you take a look at the first image right here, which is some kind of shell, you can see that it's super similar to the Fibonacci pattern. And it turns out that the structure of the shell is actually built upon the Fibonacci sequence. But this pattern can also be found in, galaxies. We find the pattern in hurricanes, in, this is some kind of plant. And this thing as well, which I, don't know the English name for. So the Fibonacci pattern is found in nature, but it's also found in the charts. So now let's dive a little bit deeper into Fibonacci in trading. So now then, what is Fibonacci in trading? Well, when it comes to trading, we are talking about something called Fibonacci ratios. And the Fibonacci ratios are found in all financial markets. So it doesn't matter if you trade crypto, Forex, or whatever other financial market, you can find these Fibonacci ratios everywhere. But what do I mean when I talk about Fibonacci ratios? Well, if you are already a little bit familiar with Fibonacci, this number right here might sound familiar, 0.618, And this number right here might also sound familiar, 0.382. These are two very important Fibonacci ratios, and by the end of this video, you will know why they are so important. But for now, let's take a look at where does these numbers even come from. Well, to get 0.618, what you do is that you take any Fibonacci number and you also take the previous Fibonacci number. Then you divide the smaller number with the larger number and you will get this ratio right here. And to get the 0.382, you do the exact same thing, but you go 2 steps down and take this number divided by the larger Fibonacci number, and you will get 0.382. And these ratios will become more and more accurate the larger the Fibonacci number you choose. And now let's focus a little bit on the image here to the left. You can, for example, see that we have the 0.382 number right here, and we have the 0.618 number right here. And you can see that in this particular case, the price went up here, the price came down, and it actually reversed just in between the 0.382 to 0.618, and then the price continued here towards the upside. And this right here is very important and something we will talk about later on in this course. Okay, so now we're ready to take a look at how the Fibonacci tool works. And to show you guys the Fibonacci tool, I will be using TradingView, which in my opinion is the best charting program. It's great both for beginners and for more advanced traders. So if you guys for some reason haven't signed up to TradingView yet, I will make sure to leave a link to TradingView both in the pinned comment and the description. You can use the link to sign up for free. You can also try TradingView Premium for free for 30 days if you feel like it. And if you later on decide to buy a plan, you will actually get a small bonus. But now let's open up TradingView and take a look at how the Fibonacci tool works. Alright, so now we are in TradingView and we are looking here at Bitcoin on a daily time frame. So here on the chart, every candlestick represents 1 day. And to open up the Fibonacci tool, what you want to do here is that you want to go up to the upper left corner. You want to press this button right here where it says Gann and Fibonacci tools. And you want to open up the tool right here, which is called Fib Retracement. This right here is the most common tool. Later on in this video, we will also take a look at the trend-based Fibonacci extension. This one is also very important, so let's start this one for now. We also actually have some other Fibonacci tools right here as well, but these two at the top are the most important ones, and especially the Fibonacci retracement. So now let's open up the Fibonacci retracement right here. And for now, let's actually just go to a blank spot here on the chart. And to use your Fibonacci tool, you want to make sure that you click on this button right here so that it's blue. Then you want to press on one spot on the chart and you want to drag the tool and press on another spot on the chart. And now, as you can see, multiple lines here, multiple levels and zones has appeared. And to make this tool a little bit more clear, I'm actually gonna change a few settings. So I'm gonna go up here to the settings tab and I'm just gonna increase the font size here by a bit so you guys can see the numbers more clearly here. Because the very first thing we need to understand is, of course, what does these numbers right here on the left, so we have a 0, 0.236, 0.382, 0.5 and so on, what does these numbers actually mean? Well, these numbers right here are basically percentages. So for example, 0.236 simply means 23.6%. And you may of course wonder, 23.6% of what? Well, remember we dragged the tool from this point all the way up to this point. And 23.6% basically means that from this point down to this point, this length right here is 23.6% of this length right here. And the next number is 0.382. By the way, this number is more important than the 0.236, and I will talk about that soon. But 0.382 basically means 38.2%. And that means that this length right here is 38.2% of this whole length right here. And this number right here, 0.5, is actually special because this is not a Fibonacci number, but this one is still a standard number here on the Fibonacci tool. And the 0.5 number basically comes from simple geometry. 0.5 simply means 50%, and that is because this move right here, down to this point, is 50% of the whole move. And now you probably get the point. The 0.618 is also a very important number, very important Fibonacci number, and it means 61.8% because this move right here is 61.8% of this move right here. And now you probably get the point, so we don't have to do all the numbers. But yeah, guys, now you already know how the Fibonacci tool works. So now when we know how the Fibonacci tool works, we are ready to learn about Fibonacci retracement. And to learn Fibonacci retracement, we first of all, of course, need to know what a retracement is in the first place. And as you guys can see, right here we have a candlestick chart. Right now it looks a little bit confusing, but don't worry, it will be very clear soon. And now, to understand what a true retracement is, we first need to know about something called swing highs and swing lows. And learning how to identify trends and swing highs and swing lows is something called market structure. And I have actually already made a full 1.5 hour long video course here on YouTube, where you will learn everything you need to know about market structure. And if you do have the time, I actually highly recommend that you watch that video after you have seen this one. But in super simple terms, the swing highs and swing lows are basically the most clear highs and lows in a trend. So for example, right here, you can hopefully clearly see that we are in an uptrend. And this right here is a swing high. This right here is a swing high. We also have a swing low right here. We have a swing low right here. And we have a swing low right here. But as I said, it takes some time and practice to be able to identify these points correctly. So that's why I really do recommend that you watch the market structure course after this video. But a retracement is basically the move here which goes in the opposite direction of the trend. So the retracements here are this move right here and this move right here. And we use the Fibonacci retracement to predict how low the price will go before the next swing move. And here you can see something super interesting. You see we had the first impulsive move up. The price actually came down to this area right here, the 0.382 to 0.5. And this is, by the way, one of my personal favorite retracement areas, and I will talk about why later on in this video. But you can see that the price came down to this area, and then we saw the next strong move towards the upside. Once again, the price came down, right? It came down to this area right here before we saw the next move here towards the upside. So the Fibonacci retracement is all about finding areas on the chart where the price is likely to reverse and continue the trend. We use the Fibonacci retracement to find entry levels in trends. So now we need to talk about something super important and something that I see, especially beginner traders struggle with. And that is, of course, how do we draw our Fibonacci retracements correctly? So now we're back here inside TradingView, and we are once again looking here at Bitcoin. And to draw your Fibonacci levels, remember, you want to go up here and make sure that you choose the Fibonacci retracement right here. And to draw your Fibonacci retracement in an uptrend, the first thing you need to identify is that you need to find a swing low and a swing high. So if we take a look at this chart right here, we can see that we have a swing low all the way down here, and we have a swing high all the way up here. And here you actually have two different methods you can use to draw your Fibonacci. And the most important here, it doesn't really matter which method you choose. The most important part here is that you are consistent. So the first way here is to start your Fibonacci from the lowest wick, the lowest candlestick wick of the swing low, and you drag your Fibonacci up here to the highest point of the swing high, the highest wick, and then you drag your Fibonacci here to the right. So this right here is the first method. The second method here is that you start your Fibonacci on the lowest candle close of the swing low, and you drag your Fibonacci up here to the highest candle close of the swing high, and then you drag your Fibonacci here to the right. And as you can see, in this case, the price went up, the price came down here to our Fibonacci area, and then we exploded higher. Once again, we can repeat this process. So right here, we have a swing low, we have a swing high, swing low, swing high, and so on and so on. And let's use the second method. So we drag from candle close to candle close. In this case, you can once again see that the price came up here. We came down to our 0.382 to 0.5, and then the price went higher. Once again, we use our Fibonacci from swing low to swing high. And as you guys can see, once again, the price came up here, the price came down. This time, we actually came down to the 0.618 to 0.5 level, and then the price saw a bounce here. So as I said, guys, you can either use wick to wick or close to close. It doesn't really matter too much, but make sure that you are consistent with your usage. So don't use wick to wick on one swing and then use close to close on another swing. Make sure that you are consistent with your own analysis. All right, so now what we know about Fibonacci retracements, we are ready to learn about Fibonacci extensions. And Fibonacci extensions is, at least for many people, often harder to understand than Fibonacci retracements. So make sure to really pay attention now. For Fibonacci extensions, what we are essentially looking out for here is target levels. So remember, the Fibonacci retracement, we're all about finding entry points, and we can use our Fibonacci extensions to find targets. And to identify Fibonacci extensions correctly, it's once again important to be able to identify swing highs and swing lows. So for example, if you guys take a look at this chart right here, we had a swing low down here, and right here we printed a swing high. And one interesting thing you can already notice here is that the price seemed to, multiple times reverse at this key level. You can see here at the 0.786, the price pulled back. Then the price went up here to the 1 level. The 1 level is a very important level, and we will talk more about that later on in this video. But you can see the price went up here to the 1 level, and at this point we got multiple strong reactions. Then once again the price came down here, and then it pushed all the way up here to the 1.618, and this 618 number is probably by now very familiar. That number comes from the Fibonacci sequence we talked about earlier, and this was the point the price reversed. So now let's switch the attention and take a look at how do we draw up our Fibonacci extensions correctly, what does the numbers mean, and which levels here are the most important. So now we're back here in TradingView, and to open up the Fibonacci extension tool, now you want to head up here once again to where it says GAN and Fibonacci tools. You press on this button right here, and now we want to choose the trend-based Fib extension. So make sure that you choose this one right here. And just as for the Fibonacci retracement, the very first thing we need to do here is that we need to identify our swing highs and swing lows, or in other words, we need to identify an impulsive move. So right here, you can see that we have a swing low. Once again, if you want to learn more about how to actually identify these points, I highly recommend that you check out the market structure course. I know I have been saying this multiple times, but I really do recommend that video. But here we have a swing low. The price pushes up here to our swing high. What we then need to do, make sure that you have the trend-based Fibonacci checked here. And now we want to drag. Once again, you can do this in two different methods. You can either use from the candlestick wick to candlestick wick, or we can use our points from the real body of the candle to the real body. And we have already been talking about this, so I will not go into detail. But in this case, we have to go from the swing low. We press on the swing low first time, then we press on the highest point of the swing high. But what we now need to do for the extensions here is that we now need to go down here to the swing low. We want this impulsive move, so the first swing low to swing high. If we copy this exact move and drag it from the low of the pullback, we want this move to go all the way up here to the 1 level. And the 1 level right here is a very common area for traders to take profits. When we measure the move, like we did, for example, right here and right here, this is something we call a measured move objective. And this is a very common method to take targets when you use, for example, chart patterns. And by the way, guys, if you want to learn more about chart patterns, I do have a full 1 hour long course about that. And I will make sure to leave a link to that course somewhere up in the corner in the eye. But okay, so now when we know how to draw our extensions, we can actually draw this one a little bit more to the right here. Now let's take a look at what these numbers actually mean. And so you guys can see more clearly here, I'm just quickly gonna change the settings, make the numbers a bit larger and press OK. So now, just as for the retracement, these numbers right here are basically percentages. So for example, this number right here, where it says 0.786 means 78.6%. This number right here means 61.8%. This part right here is 50%, and so on and so on. But now these numbers actually tell us a slightly different thing compared to the retracement. So because of basic geometry, that this move is the same length as this move, these numbers will basically tell us how close are we to the one number, or in other words, how close are we to the 100% measured move objective. So for example, 0.786 means that the price have gone up 78.6% to the measured move objective. The one number here means that the price have gone up 100%, or in other words, we have reached the measured move objective. But what about the higher numbers, such as 1.618? Well, the same principle is true here. The 1.618 basically means that we have now surpassed the measured move objective by 61.8%. And this level right here is yet another common level for traders to take targets, and many times we will see the price reverse at this level. Later on in this video, we will talk about how you can change the settings here to choose the most significant Fibonacci extension numbers. But for now, understanding what the numbers actually mean is everything you need to know. Alright, so now the time has finally come here to talk about the golden zone. And if you are a little bit familiar with Fibonacci, you might have heard about the golden zone. But what is the golden zone and why is it important? Well, the golden zone is simply the Fibonacci area between 0.5 and 0.618. Or at least this is the most common definition of the golden zone. And it's actually considered to be one of the best Fibonacci levels. Later on in this video, I will talk about another zone that, at least for me personally, is at least as good as the golden zone. But the golden zone is great and is important to know about. But now you guys may be wondering here, why is the golden zone between 0.5 and 0.618? What is the reason behind these numbers? Well, the 0.5 level is derived from basic geometry. So for example, if you imagine that this right here is our impulse move between the swing low and swing high, the 0.5 level is basically 50% of this move. And in many trends, the impulse moves and pullbacks will be about the same length. And the implication of this is that many times the price will reverse around this 0.5 level. But what about the 0.618 number? Well, earlier in this course, we have already been talking a bit about this, but the 0.618 basically comes from, this is just a fancy, mathematical expression. It's n minus 1 divided by n, where n is a Fibonacci number. The reason I wrote the mathematical expression here is just because I don't have a lot of space to write it with text. But basically, you can choose any Fibonacci number and you take the previous Fibonacci number of the number you chose here, and then you divide it by the Fibonacci number you chose. And this is where the 0.618 comes from. And as we have been talking about, this number is not only found in financial markets, you can also find it in many natural phenomena as well. So just to be clear here, right here is 0. Here in the middle, we have 0.5. And the lower line here is the 0.618. Right here, we have 1. And the golden zone is the area here in between 0.5 and 0.618. Later on in this video, I will show you guys exactly how you can change the settings of the Fibonacci tool to get this golden zone. But now let's switch attention once again here, because I want to talk about what, in my opinion, probably is the most underrated Fibonacci zone. And that zone is the 0.382 to 0.5. And yes, as I said, 0.382 to 0.5 is, in my opinion, an underrated Fibonacci zone. And the reason I really like this zone is because this is a great reversal zone, especially in strong trends. So when you have a strong trend, like you for example see right here, and with strong trends, I mean that we see strong impulsive moves here. You can see we had a strong impulsive move, we have yet another strong impulsive move. When we have strong trends like this, many times the price will actually not be able to pull back, you know, lower than the 0.5 level. Many times the pullback here will be a bit more shallow and reversed slightly above the 0.5 level, and most of the time slightly below the 0.382. So you can for example see in this image the price saw an impulsive move, and where did the price reverse? Well, we saw a reversal here at in between 0.32 to 0.5. Once again, we saw a strong impulsive move and the price pulled back and tested once again the 0.382 to 0.5 multiple times, and then this strong trend continued here towards the upside. And now you may of course once again wonder, where are these numbers from? Well, the 0.382 comes from the Fibonacci sequence. This time we take any Fibonacci number and we take the number that is 2 steps previous to that number and divide it with the number we choose. That is basically n minus 2 divided by 9. That is basically n minus 2 divided by n. And as I said, where n is a Fibonacci number, and 0.5 once again comes from basic geometry. The last zone I want to talk about here before we dive into the best Fibonacci settings is something called the golden pocket. And for the two previous zones, I showed you guys a chart, but for this zone, I'm showing you guys the default Fibonacci settings, and you may of course wonder why. Well, that will be clear here very soon. But first of all, let's take a look at what the golden pocket is. The golden pocket is simply the Fibonacci zone here between 0.618 to 0.65. So this one is a little bit deeper compared to the golden zone, or actually it's quite a lot deeper than the golden zone, and it's also a smaller zone. So it's both deeper and smaller compared to the golden zone. And we know from earlier where 0.618 comes from. But what about 0.65? What is so special about 0.65? Is anything special about 0.65? For example, if we take a look here at the default Fibonacci settings, so the settings for Fibonacci tool, you can see that we have no level here that is 0.65. So in order to, you know, have the golden pocket, you need to change the settings on your own. But you might not want to do that because it seems like 0.65 is pretty much arbitrary. And what I mean here by arbitrary? Well, it seems like 0.65 is pretty much a random number. Or in other words, there's no mathematical or geometrical explanation behind the 0.65 number. And because this is the case, we have no real reason to use the 0.65. Perhaps it comes from some other traders finding it successful to trade these numbers, and that's definitely possible. But because we have no real reason why we use 0.65, my recommendation here, or what I'm doing, is that I'm actually using this zone with caution. I'm personally, to be honest, not even using this zone. So use the golden pocket with caution. If you want to, you can of course always experiment. Perhaps the golden pocket works good for you and for the specific asset types you are trading. But as always, when you try strategies out, you need to make sure that you have proper risk management, and the best thing to do is to always practice with paper trading or practice with fake money before you actually dive in to the real market. So now it's time to take a look at the best Fibonacci settings. If you guys didn't know, you can of course change the settings of the Fibonacci tool to potentially improve the effectiveness of the tool, and as a result improve your win rate. And in this chapter we will cover multiple different settings, and some settings are more useful in some situations. Many times when it comes to indicators in general, it's often that no size fits all. So depending on what you are trading, if you're trading long term, short term, and your trading strategies and so on, some settings are better in some situations while other settings are better in other situations. So these are the settings we're going to cover in this chapter. So first of all, we will take a look at the golden zone setting. And we have already been talking about the golden zone. So if you haven't watched the chapter about golden zone yet, I highly recommend that you do watch that one before we take a look at the settings here, so you understand the golden zone. The next setting I want to take a look at is a setting to get perfect entries in strong trends. So this setting is better when we are in a strong trend compared to if we are in a more weak trend, or if we are in no trend at all, you shouldn't even use that setting. But this one can be great in strong trends. The next setting I want to take a look at is the setting that I find is the best setting for beginners. So here I will take a look at the best Fibonacci levels for beginners. And last but not least, I will take a look at a setting to find exact target levels. Alright, so the first setting we're going to cover is the golden zone. So to change the settings of your Fibonacci tool, first of all, we want to make sure that we have the tool checked. So you go to your Gann and Fibonacci tools, and you want to press here on Fib retracement. What you then want to do is that you want to drag out your Fibonacci tool. You can do this anywhere on the chart. And then we should see this window appearing right here, and you want to go to the settings tab and press on settings. Next, you want to go down here to where we have all of the fib levels, and you want to make sure that you have the first one, 0 here, you want to have checked, but you actually want to uncheck the 0.236 level, you want to uncheck the 0.382, you want to keep both the 0.5 and 0.618. You want to uncheck the 0.786, and we also, since we're not going to use the fib extensions, we will also uncheck all of these levels right here. So your settings should look something like this. And now, because this is the golden zone, I do want to do a few more settings here. So the 0.5, I'm going to change here to gray. Or actually this one right here, so we have it the same color as the rest of the indicator. And as for the 0.618, what I do want to do here is that I want to change this one to yellow or golden, something like this, so we clearly have a golden zone. Now if you want to, you can also change the background here. Perhaps you prefer to have a little bit stronger background or a little bit weaker, and if you want to, you can of course customize the size and so on, but now we are basically ready here to press OK. So what we now can do, we can delete our fib extension, and now we will notice that the next time we use our Fibonacci tool, so for example, let's use it from this swing low right here. So here we have a swing low, and remember what we do, we drag it from the swing low up here to the swing high. In this case, I use it from the real body to the real body, and then we extend this level to the right here. So as we can see, in this case, the price went up here, the price came down to the golden zone, and then we reversed higher. Alright, so the next setting I want to show you guys is actually one of my personal favorites. And this one is especially good when we are seeing strong trends, like for example, right here. So once again, to change the settings, we go up here to Gann and Fibonacci tools, we choose our Fibonacci retracement, we drag it out here, and then we go and click on the settings tab. So once again, you want to make sure that you have the 0 right here checked. For this one, we want to uncheck the 0.236, but we actually want to keep both the 0.382 and we want to keep the 0.5. For the rest of the bars here, you actually want to uncheck all of these ones, or of course you want to make sure that you keep the 1. So these right here are the settings you want. And what you also can do here is that you go up here to the 0.382 and you change this one to the same color as for 0 and 1. And that's pretty much it for this setting. Of course, as always, you can change the background if you want to. I like to keep it as it is. So now we are ready to go down here and press OK. So now you may of course wonder, why is this specific setting good when we are seeing strong trends? Well, when we are seeing strong trends, like we are seeing right here, you can see we have a swing low, swing high, another low, high, low, high. And when we are in these steep uptrends, you will realize that many times the pullbacks here, so the pullbacks are the moves against the direction of the trend, the pullbacks will have a very hard time to go below the 0.5 level. And remember, the golden zone is below 0.5. Most of the times the price will reverse actually slightly above 0.5, or many times more close to 0.382. And that is why I really like this setting, especially when we're seeing lots of demand like we are, for example, on this chart. So now let's use the Fibonacci tool with our new settings. So once again, we can either anchor from wick to wick or body to body. In this example, we can anchor from the wick of the swing low up here to the swing high. We can drag this one a little bit more to the right here. And as you can see, the price came down to this level. We saw a strong, this is actually something we call a bullish engulfing pattern, which is a pattern that indicates a reversal here towards the upside. So we saw a bullish engulfing pattern coming in here at our key Fibonacci zone. We can actually, once again, we drag from wick all the way up to the highest wick of the next swing high. We drag it a bit to the left here, and once again we can see that the price pulled back here. We pull back all the way to the 0.382 to 0.5. We saw a strong candle right here, and then the price once again shot up to the upside. Let's see if we get another pullback. You can see we anchor from wick to the highest wick, right? You can see the highest wick all the way up here. We drag the Fibonacci zone a bit here to the right, and you can see that once again the price came down right to this area with this green candle right here, and then the price continued to push higher. And now I just realized that I haven't shown you guys an example of a downtrend yet. So let's take a look at how we can use these settings in a downtrend. So the first thing we can notice here is that we are once again seeing a strong downtrend, a very steep and very clear downtrend. So what we do here, we once again have the same settings as before because we have a strong trend. And now we can use the other method. So we anchor from the candle, the highest point of the swing, down here to the low. You can see that we saw the impulsive move up, the pullback came up to our area, and then it continued down. We can once again use our Fibonacci from the next swing high to swing low. So we use it like this, and once again you see we saw the move, the pullback came up to this area, and then we saw the next push towards the downside. So now the next settings I want to show you guys is actually the settings I recommend for beginners. So if you are more of a beginner trader, this is, in my opinion, the best settings. So to change the settings, we go up here to the Fib retracement and we drag the Fibonacci retracement out anywhere on the chart. Then we once again head up here to the settings tab. And now let me actually show you guys really quick how you can change back the settings to the default. To do this, we go down here to where it says template. You press on this one right here. By the way, you can also change, you can also save your settings by clicking save as. So if we want to save our current settings, we simply click save here, and you can call this one, for example, strong trends, and you can click save here. That is something you can do. But now let's actually apply defaults. So we take the settings back to how they were in the beginning. So now for the best settings for beginners, what I recommend to do here is, once again, we keep the 0, the 0.236. We once again want to unshake. This level is, in my opinion, many times not really that useful. You can see that for pretty much all the settings, we don't have the 0.236. But for this setting, you want to keep the 0.382. we actually want to uncheck the 0.5. You can keep the 0.5 here, but you don't really need to have it, and why will be clear very soon. As for the 0.618, you want to keep this one. You want to uncheck 0.786, and the rest of the bars you want to uncheck here. And as you guys know, as for the colors, I like to keep this one the same color as the other one. And the last one you can change to any color really. Let's do purple for this one. And now we are done here. So now with these settings, as you can see, we have an area here in between the 0.618 all the way down here to 0.382. And the reason why I really like this setting is for two reasons. The first reason is that with this setting, we pretty much get the best of two worlds. We include both this area right here, which remember, this right here is the golden zone, but we also at the same time include the setting for strong trends. So we pretty much get the best of two worlds here. You can also notice that this zone right here is much broader compared to the previous settings, and this can actually be both a good and a bad thing. The good thing about this setting is that the price will more often reverse in this area compared to the previous settings, but at the same time the zone is broader, so the signals will be a little bit less precise. But when you use this setting, you will realize that the price will so many times reverse in this area. You can see this example, the price pushed up, came back to this area, pushed up once again. We can drag up a new Fibonacci retracement, and once again you see the price coming down, reverses to the upside. We drag out our next Fibonacci zone, and you can see that even for this next move we saw the price coming down to this area. But here, and this is very important, if we take a look at the next move, we drag from swing low to swing high, you can see that the price actually broke below this zone. You can see the price broke below here, and you can actually use this as a potential warning sign that the trend might be coming to an end. Because when the price breaks below the 0.618, we are talking about a very deep retracement. And deep retracements, when the retracements gets too deep, especially when we break below the one line here, that's a warning sign that this previous uptrend might be coming to an end here. And when the price broke below the 0.618 and also we broke the one level here, which is the low, you can actually see that this was the beginning and the termination of the trend. So now last but definitely not least, let's take a look at a settings to find exact targets. And for this setting, we are not going to use the Fib retracement. For this setting, we're going to use the trend-based Fib extension. So make sure that you choose this one right here, and then you want to drag it out here on the chart. You need to press at 3 random points, and you can do this anywhere on the chart. When you have done this, you once again, you head up here to the settings tab of the window that pops up. So we go here to settings. And for this setting, I'm actually going to keep it very simple because I have two main levels that are great for targets. So for this one, you want to keep the 0, but I'm going to uncheck all of these levels all the way to 1. So you want to uncheck all of these ones. You want to keep the 1 here. You want to keep the 1.618. You can also keep the 2.618. That one I sometimes use, especially when an asset breaks an all-time high. If we're talking about like a small cryptocurrency or something like that, the 2.618 can be useful. But for this example, I'm going to uncheck all of these. So this is a super simple setting, but it's very useful. So you want to have 0, 1, and 1.618, and then you want to press OK. And now if you look at this chart, you might actually remember that this was an example from earlier in the video. But let me show you guys how this looks like with the new settings. So once again, we want to anchor here at the swing low. We press the second time on the swing high, and we go down here all the way to the swing low. Then we drag the Fibonacci extension here to the right, and we get our target levels. The first and a very important target level is the 1 level. And this one simply comes from the 100% measured move. So if this move, this swing move right here, in order to reach our first target, we need to see a move of the same size. And as you can see in this example, the price came up to this area and sold off. So this would have been a great level to take some profit. The next key target level is the 1.618. This is yet another key target that a lot of traders are paying attention to. And as you can see, when the price reached this level, we actually sold off here. But now let's take a look at how these settings would have done for the next swing. So now we anchor at the low all the way down here. We go up to the swing high, and then we go down here to the swing low. We drag it a bit to the right here. And once again, you can notice that the 100% measured move, the one right here, acted as a key area. The price came up to this area and sold off. But even more importantly, if we look a bit to the left here, you can actually see, if we drag it even more to the right, you can actually see that the 1.618 level is the level here that the price struggled to get through. And we have now fallen all the way down here to the one level. So now in this final chapter of the course, we will put everything we have learned so far together and build a trading strategy. And in order to really understand this trading strategy, I highly recommend that you have watched the rest of the course. And the settings we will use here is what I called the best settings for beginners. And I will also use our fib extension settings. But all right, so step number 1 for this trading strategy is that we need to identify a swing low and a swing high. And as you can see right here, Tesla printed a clear low and we pushed all the way up here and printed a high. And let me actually use the replay mode here so we can take a look at how this would have looked like in a real market. So when we have identified our swing low and swing high, this is the point when we use our fib retracement. So we use our fib retracement right here. We drag it from the swing low to swing high, and we use the settings I talked about earlier. We also drag this zone to the right here. And what we are waiting for here is for the price to come back to this zone and then push higher. So let's play this one out for a while here. As we can see, the price did come back down here to the zone, but we actually don't want to just blindly buy something when the price comes down to our fib zone. In order for us to build a real trading strategy, we need some type of confirmation, or in other words, we're looking out for confluences. We want to see multiple bullish signals happening at the same time. And right now, we don't really have enough information for a trade. So let's play this one out a bit more. But at this point, it starts to look very interesting because as we can see, Tesla in the short term have been printing one low and then a lower low, while at the same time, we're printing lower highs. So it looks like we have some sort of downward sloping channel right here. And this is actually something we can use as a confirmation. So if we continue to play the price here, we can see that at this point we broke above the structure. So this right here is a bullish signal. And at the same time, we saw the reversal happening here at our Fibonacci zone. So now when we have two bullish signals happening after each other, we can actually enter our trade. For this example, you have multiple ways to set your stop loss. You could argue to set your stop loss below this little low right here. But if we're looking for a large trade, I would actually put the stop loss below. You can see the lowest point here of the structure. And what are we going to do for our target levels? Well, as you guys know, we have our trend-based fib extension. So how do we use this one? Remember, we anchor from the low, the same low and the same high we used for our Fibonacci retracement. And then the third anchor is down here at the very low. So what we now do, we zoom out a bit here and we set our target up here at the one level. This right here is the measured move objective and a very common area for the price to reverse. And if we play out this trade right here, we can see that the price came up here to the one level. We saw a small pullback. The price actually pushed a tiny bit higher, but then the price started to fall. But fortunately, we don't have to worry about that because we locked in our profits at the 100% measured move. All right, guys, so this course is coming to an end very soon. So I want to thank you all so much for watching. And if you guys did find any value in the course, The best thing you can do to show your support is simply by dropping a like on the video. It helps out more than you think with the YouTube algorithm and all that stuff. So thank you all to everyone who takes the time to smash up the likes. And also, of course, if you have any questions about this video, or if you have, any questions about any of my other videos, please don't hesitate to drop a comment down below. As you might have seen in the comment sections of my other videos, I try my very best to answer to every single comment. And yeah, last but definitely not least, when you are ready to continue your trading and learning journey, I highly recommend that you check out this playlist right here. In this playlist, you can find all my free courses I have made so far, and there are many more to come. But yeah, take care everyone, and I hope I will see you in the next video. Ciao, ciao.